Applied Materials, ticker symbol AMAT, otherwise known as AMAT is what I like to call them. They're down almost 10% year to date, but in the last 5 years, they've actually almost tripled in share price, up over 180%. Now, because of the Internet of Things, artificial intelligence, crypto mining, and high performance computing, AMAT has become a very popular stock that a lot of people are very bullish on. And so a lot of my subscribers have actually asked that I do a review video on them. And so the question does thou remain? Is it a buy? Let's find out. What's up everybody, my name is Ale, welcome to my world of finance. If you want to see daily videos, don't forget to support the channel by hitting the like button. Also, don't forget to leave a comment down below for Ale's World Consensus. Let me know if you're bullish, bearish, or neutral on Applied Materials stock. I'll tally up the results and I'll have that for you guys in a future video. But with all that being said, let's go ahead and get started. Okay, now to be honest, I've never purchased AMAT stock, and that's despite the fact that I've been very bullish on many other semiconductor related stocks like AMD. I like Micron. Lately I've been very bullish on Taiwan Semiconductor, but AMAT has always just been a stock that has been kind of out of my radar, out of the loop, and I haven't really given it too much attention. Now, before we go any further, I should clarify that AMAT is not your typical semiconductor related stock, maybe not in the way that you might think of it. Whereas you think of stocks like, or companies like AMD, Nvidia, Micron, Taiwan Semiconductor, Global Foundries, those usually design, build, and market or sell the chips, depending on, the exact specifics of each one of those companies can vary, obviously, but depending on what they do, those are usually involved in those kind of areas. AMAT actually supplies the materials, the equipment, the software, all the stuff that is needed in order to manufacture those chips. So they're kind of the behind the scenes player. They also do some work with displays and solar power as well. Now, before we take a deeper look into that and we look at the company's pros and cons, let's take a quick look at the stock's performance. Now, currently their stock is priced at about $46 per share at the time of this recording. I consider that to be kind of a low to medium price, just kind of in the general sense. And when looking at their performance in the last 5 years, I mentioned it before, they're up over 180%, but year to date, they're down about 9%. Now, when looking at their PS and PB ratios, they are a bit higher than I would like them to be, but their PE ratio is very reasonable at about 15, which is a bit refreshing in a market where you continuously see very high PE ratios. And so this is why I sometimes like to invest in stocks that are actually down for the year, usually have a little bit of a better PE ratio, giving a little bit of a better value, as long as the company can improve and still has room to grow in the future, which we will take a look at in just a second. And speaking of value, when looking at their PEG ratio, which factors in future growth, you can see that it is sitting under 1, which is awesome. That tells us that we're getting a decent value for the price that we're getting. Now, currently it's at about 0.98, which I would normally say is a fair value, but considering how many other stocks out there have ridiculously high PEG ratios, I don't think you'd be crazy to say that 0.98 is a sign of it being a bit undervalued at the moment. Now, when looking at their past 4 quarters, you can see that their EPS reported have been pretty strong overall. Every single one of them have had positive EPS surprise. Nothing too crazy, but impressive nonetheless. And you have to keep in mind that we're well into a year where consumer electronic sales have been a bit weaker, especially with smartphones, and this can hurt AMAT in not just one, but 2 different ways. Less chips and also less screens. Keep in mind that AMAT also supplies materials and equipment for screens as well. Also, I just want to mention really quick that they are going to be reporting earnings again in about a week or so, so make sure you're subscribed. I will definitely make an updated video on that. It'll definitely be something to watch, but let's go ahead and transition now. Let's talk about their income statement and their balance sheet. When looking at their income statement for the last 4 years, you can see that revenue and net income have increased every single year. 2017 in particular was a very strong year for Applied Materials, but one of the reasons why they have struggled in 2018 is because analysts and investors have been a bit doubtful that that growth from 2017 can continue into 2018. This is especially because of weaker smartphone sale projections heading into this year. And so maybe one of the most important questions that I see asked about Applied Materials is whether or not they can continue to grow their sales despite the fact that they are in a market that is heavily cyclical. But we'll get into all that in just a second. But when looking at their balance sheet, I would say it's pretty strong. Their asset to liability ratio is about 2-to-1, which isn't amazing, but it's okay. And then their current ratio is about a 3-to-1. That's pretty solid, I would say, overall. Okay, now that we got all the boring stuff out of the way, let's start looking at all the pros and cons of the company. Now, because AMAT operates in a market that is very cyclical, it benefits to be as diversified as possible. And I do think that AMAT does a pretty good job here. When looking at their business separated into the 4 end market categories of non-volatile memory, DRAM, foundry, and logic, you can see that AMAT is pretty heavy on the first 2, but well diversified overall. In fact, when looking at this chart here, you can see that their biggest competitor, Lam Research, is pretty heavy into non-volatile memory. And when looking at individual customers as well, you can see that AMAT only had 2 customers in 2017 that accounted for more than 10% of their revenue. Lam Research had double that amount at 4. Also, I think it's important to note that AMAT has a net profit margin above 20%, although Lam Research is pretty similar there as well. And not to get off topic, but to speak a little bit further about diversification, think about it, guys. Investing in a stock like AMAT is actually a great way to get a little bit of exposure into the chip market without having to choose between competitors like AMD, Nvidia, Intel, maybe to a lesser degree like, Apple or Micron, things like that. Instead, you can just invest in a company like AMAT, which supplies the materials and equipment to those other companies, and so in some ways that can kind of lower your risk as well. Also, I forgot to mention this before, but AMAT does actually pay out a dividend, and while some investors might think that it's a bit low at a 1.7% yield, they do have a long history of making consistent dividend payments for years, and they recently doubled their payment this year versus last year. And so for all the reasons that you can invest in AMAT, paying out any kind of a dividend at all is just an extra reason, just a bonus reason to invest in AMAT anyway. And so I'll gladly take that dividend, don't even have to think twice about it. Also, it helps to know that the company itself is bullish on their own stock. In fact, early in the year, they announced a share buyback of about $6 billion. That's a pretty big deal considering that their market cap is less than 50 billion. Okay, now we just went over a lot of really good things about the company, lots of reasons to be bullish on the stock, but we do know that the stock is technically down for the year, about 10%, right? So why is that? Well, when I look at the arguments that bears are making on the stock, I think it really comes down to 2 specific things. One is that smartphone sales are slowing down. In fact, AMAT CEO said in their last earnings call that smartphone sales are tracking below expectations, and he cited high-end models as the biggest concern. And we know that that can really hurt AMAT in a very negative way. In fact, when looking at projected sales for screen-related sales for next year, those are expected to drop by 15%, a pretty big difference considering that this year they're expected to jump up 30%. However, even though this will hurt AMAT in the short term, something to keep in mind is that display-related sales only equate to about 13% of AMAT's total revenue. See, we're coming back to the fact that AMAT's diversification is a huge asset. But we still have to look at the other major concern coming from bears, and that is that there is a lot of uncertainty, or there's the possibility of a crash in the semiconductor industry, and that's a pretty big deal because that makes up about 2/3 of AMAT's business. And so again, we're brought back to the whole cyclical argument where you have a tremendous amount of demand. We're seeing that especially in the memory market, but a ton of demand leading to a ton of production, leading to possibly an oversupply, which would inevitably lead to a crash. And so if we do in fact get that, then I think a lot of these semi-related stocks would definitely get hammered. But my personal opinion, and this is just my opinion based on my research, you guys got to do your own research, make your own decisions, but from what I've seen, I haven't really seen a lot of these companies give a lot of negative news that would signal an end to this booming environment. I only see the Internet of Things, artificial intelligence, and autonomous driving increasing in the future. And even when we talk about things like high-intensity computing, graphical performance, the gaming market, those are all things that I think consumers will always be hungry for and they'll always want the best. And so all of those different elements together have helped AMAT's semi-related revenue jump up 25% in the last quarter, or almost 25%. And that's not even mentioning the server side of things. AMAT estimates that data centers could be a larger market for DRAM than smartphones themselves, citing that server demand is growing 75% faster than mobile demand. And something that I forgot to mention when looking at smartphone sales, we know that Taiwan Semiconductor is heavily rumored to be building the next 7nm A12 chips for the next iPhones, and guess who stands to benefit from that as well? Somebody needs to provide those increasingly expensive tools and equipment to build those chips. And so I think that all of these different aspects that we're talking about heavily rely on NAND and DRAM technologies that I think will always be in demand. Now, the prices might be a bit lower now due to increased supply, but I think that the demand will still be there, at least in the not too distant future. In fact, I was reading one report that said that NAND and DRAM memory demand are expected to grow by 35% and 20% respectively for the next few years. And Grandview Research also projects that automotive chip demand will rise by 10% through 2025, and IoT chip demand will also increase by 15% through the next 5 years. And so in conclusion, I think that if you're bullish on some of these technologies, then I don't see how you wouldn't be bullish on some of these tech stocks, especially ones that are as strong and as well diversified as Applied Materials. And even if cyclical worries do bring down the stock even further, I would just see that as even cheaper prices than the ones that we're already getting. And so my rating, based on my own personal opinion, is that I am bullish on Applied Materials, and I think that most analysts would agree with me. In fact, when looking at MarketWatch.com, 21 analysts give it a buy rating, 6 give it a hold, and then 0 give it anything remotely close to a sell. But who cares what I think? It matters what you guys think. So make sure you leave a comment down below. Let me know if you're bullish, bearish, or neutral on AMAT stock. I'll tally up the results and I'll have that for you guys in a future video. Also, if there's any other stocks that you guys want me to look at, make sure you let me know in the comment section. And if you want to just say anything else, absolutely feel free to leave any comments down below. Thank you so much for watching. I hope you all have a wonderful, beautiful day and that you take care. Bye.